Bitcoin right now is delivering a message like this. We may see some volatility. If Bitcoin drops 10 to 12% and also going to drop like 15 to 18 to the max, can that impact your portfolio? Now that's altcoins in general, which means that's the average market volatility, what we are discussing. But you may actually see even further drops in some assets, high risk assets, for sure. That cannot be neglected. So if you are in positions where you may get hurt, if you are like 50x leveraged, that's going to be hard on you. Now, what is a scenario which can neglect this? Like you can say, okay, that's not happening, we are going the other way. That means you now have to break through this level of resistance. Now you wicked about that, or the sellers pushed you back in. So the buyers actually tried to break this particular level to the upside, and we thought at one point, okay, we broke that. But then it happens like sellers became even stronger and they pushed us down. So if we are dropping below the 21-day moving average on a 4-hour chart, then we lost that short-term support. We are going towards 22,500, after which the next support is here close to 21. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10%. Earlier today, we were actually looking at different assets and the movements in the market. Right now, we actually understand like, okay, there are assets which actually show you this pattern. RSI suggests it's breaking higher, MACD crossed to the upside, and then what happens? In just a week or two, you actually break higher, you move towards your target, hit your target 1, gets towards the target 2. So if you're already there in the market, you're like, okay, this is the target, I'm taking out my profits by 80%. And that's exactly what happened. It did not actually come to hit your target. Sometimes you do, but here you reversed by 85%. Now, that is an opportunity in the market. But right now, when you see market is slowly stabilizing close to $1.1 trillion. Now the question is, are we going to drop back to $1 trillion before we bounce? Because we are right now observing these assets running up when the market is balancing. So money is moving from one asset to another. You look at the same top 100, you see other assets which are slowing down today. They went up the last day, but now they're slowing down and the money is being moved into other assets. You're getting these breakouts. So you do see volatility coming into the market. Now, ask this question: if Bitcoin is going to do that drop, what are we looking on for XRP? That's going to be a big question for us, right? Say, right now we tested this level of resistance, which, I thought like at one point we're going to break that. That didn't actually happen. We got rejected here. That means now when you zoom in to this area, what you see is that the sellers getting exhausted and the buyers slowing down, which is not what we actually wanted, right? You actually saw like the sellers were not in control. We were always winning that match, but at one point buyers were backing out. Now if you look at that, we didn't get the follow through to the upside. And right now, the short term, the ultra short term kind of support, that's being broken. That's not a good thing to see on live, because when I was making this chart, talking about this idea with my members, we were still about that and it was just a possibility. But now it seems like, okay, more or less we are coming back to this range. We are just breaking that to the downside. We got rejected on the macro and the micro support is being broken. Fine. So now we actually go back onto that daily chart to see like, okay, if that's happening, you want to literally look at where the volume is situated in, right? So you actually go to different charts and you really want to understand like where this is going. So you go on to XRP chart. Let's actually go somewhere close to, say, for example, now I think I actually made this support before, saying, okay, the price most likely is going to come back down. And one of the sense for that is, if you are literally looking at like how things are evolving here, you can actually put that perspective, say, okay, there is a lot of volume here. After which you are looking for 0.34, which is a way lower than where we are right now. So if you really zoom out and connect these area for last couple of months, now we are like, okay, majority of the volume is close to this range. So I would assume that there is a lot of orders in the exchanges pending, waiting for the price to come to this range. So as soon as the price hit this range, I would actually say like, okay, now it makes sense. So once the price actually come back to the support range and bounce, we need to understand this also happens to be the previous level of resistance, which is now going to be a big support. So if we can handle that, it's going to be bullish. Now, macro, you are understanding that things are changing. You see a lot of big organizations firing when smaller organizations are hiring. So even if you say, okay, 15,000 jobs are being created. We had this discussion today and I'm like, yeah, that is true. But when Google is kicking you out and you're going to a small organization, obviously you're not going to get the same pay in this economic situation. So your purchasing power drops. So in the same sense, when we are talking about the purchasing power, there's another thing, intrinsic value. I saw this and I was really surprised. I'm like, okay, does that really mean intrinsic value? What's the definition of intrinsic value? I'm like, it's great to put out your opinion outside. That's cool, but not to hype the value of an asset, right? When you're looking at this, you will literally see a lot of different equations. Now, when I'm doing the CFA, I'm preparing for that right now. And I'm like, when you go through these equations, when you're spending time reading this big book, and it's not one, you can actually see like, there's a lot of it. And you're learning through this and you come back into the market and you're watching this in the market and a lot of people sharing this, a lot of people talking about this positively. And I'm like, wow, that blows my mind. If you're here in the market, what you're doing is learning. This is seriously a learning procedure. I appreciate this guy actually. So for example, the question he asked and the response. Now, I personally have some questions for the one side of this, where it actually suggests like, okay, it can be pegged to a fiat currency in this way, blah, blah, blah. So I actually put out my thought process there, right? We think that's not the real use case. Whereas the other one is like, another way is by using XRP as collateral to back something else. XRP cannot be pegged to something. It has its own value. It derives its own value based on its utility. Great. But it can be used to back something else. That is possible. You're creating a new synthetic asset to back this. That is possible. But then the question is, say for example, you're using gold to back something else, or you're using that something else to create something else. Now that becomes weird. You don't actually get to price this first asset, which you are using to price for the second. You can price the second one. So there is always a confusion. But again, AI, which is compiling all this information in the internet and giving you the best thing. Now that is possible, right? Because they actually talk to you through this about the escrow. This could be done by issuing a synthetic stable coin that is backed by a certain amount of XRP that would be held in escrow. And I'm like, you do have escrow. Ripple is maintaining that. They're working with a lot of different central banks, which central banks, we actually saw these central banks putting out reports in which they were discussing about synthetic stable coins, synthetic central bank digital currencies. Now, can this be a stable coin which they're going to use for cross-border payments? Who knows? But, things are there in the market, right? Now, this is a learning procedure. You really don't know what's true, but you're trying to learn from it. Whereas this one may not seem to be like that, right? Anyway, we are going back into the market. Like, that's what's important here. Now, while looking at the market, say you remove all this and what you're looking at is like, okay, if I do get a thought process of we are going lower, where are we going? This is the previous level of resistance and you're trying to see the standard deviation and close to that. At the bottom is going to be 0.38. That's actually good to know. Why? Because if the price is breaking that level, now your support becomes 0.34, 0.33. Look at the RSI. What RSI is suggesting you is that the price can actually drop and it can come here. So primary question for me will be, when the price is dropping, is it actually slowing down close to the moving average, 21 moving average? If so, is the RSI already reaching the support? If not, then the RSI suggests you have room to the downside, right? Which is not something we want, because if we are getting a fake out here at this level like this, that means, we may actually come back lower to test this level. And that is like a 15% drop. That's why I actually asked this question here, like if alts drop 15 to 18%, will it impact your position? Are you heavily leveraged? Now, understand that 15% leverage, 15% drop means if you are in a 10x leverage, you are done. If you are in an 8x leverage, you're done. If you are 5x leverage, that's 75% down, right? So you really have to sit there and ask that question, like, are you doing that stuff? If so, you have to prepare. Now, yes, we agree on the perspective that right now there are assets which are moving up. When people are dropping their trades in one side, they are also moving on to the other side. So you actually look at the volume and you understand these assets are getting volume, but they are also volatile. Their volume is going up and fluctuating, not staying at the same range, but it does show you like, okay, people do look for opportunities, and that's why you see moving around. You see volume in certain asset dropping and similar volume is increasing in another asset, which makes some sense here. But if you are actually really looking for these kind of calls, you can look for Patreon. The link is given in the description below. So guys, if you receive value for your time here, please do hit that like and subscribe button. I'll meet you guys on the next video. Bye-bye.